Good morning, good morning, good morning. No man, not a bear market. Not yet, at the very least. This is simply the market choosing a direction after waiting a very, very long time for the direction to be going up, and it instead said, hey, nope, we're going down. Supply and demand. We're going to be going through the key levels that we need to watch out for this weekly close. Begin in around 5 minutes. In the meantime, can we do a quick voice check? Am I too loud? Am I too soft? Is the music too loud? Is the music too soft? Smash the like button. How's it going, Loomies? Call Roberto. Ben, my man. So often people are going to look for like fundamental reasons as to why the market's going up or down, but in the short term, right, fundamental reasons don't matter all that much. There could be a news event that can act like a catalyst for the direction that the market was going to go in anyways. So today we're seeing the market go down, right? I think regardless of what the news event was, this market was going to go down because clearly the amount of buyers weren't enough to overwhelm the sellers, right? And all of those longs that took a position to the upside had to unwind the positions or get liquidated when the market decided to break volatility in the wrong direction, right? Wrong relative to what the bulls wanted. So supply and demand at the end of the day, man, that's what dictates markets in the short to mid-term. Fundamentals only matter in the long term. You'll see the stupidest of meme coins pump like crazy. Why? Because the supply and demand. There's no real reason for those coins to go up, but there's enough demand to push those coins up in the short term, right? So remember, that's what gives you edge in trading. Looking for supply and demand dynamics on the charts. We're going to begin soon. Julian's here too. Wait, I got to make sure. Oh man, I didn't do my checks. Give me a second. Studio mode. All right, seems good. Alrighty, let's begin, guys. And boom and boom. Okay. Let me switch on over to the chat so I can keep an eye on what you guys are seeing. How's it going, John? If you guys do have any questions, feel free to ask today. We're going to be keeping the discussion specifically to Bitcoin and the weekly close, all right? I'm going to turn off the music too now, or rather at least turn it down. I'm famished. I haven't eaten all day. So I'm going to do a quick stream for you guys. lay out the situation as to what we're looking for, and then I'm going to go eat. All right, so in the last live stream, we went through all of these indicators, right, to basically give us a overview as to how the market's looking with the current break towards the downside. And as you guys can see, it's a mixed picture. Overall, the midterm looks disgustingly bearish, and the long term is still intact, right? We're holding weekly levels and we're holding monthly levels. We're holding some key weekly and monthly levels, not just any levels, right? Levels that we used to determine our move to the upside all the way back in December, Jan, November, actually. So most importantly, we are looking at the weekly dynamic, right, which is this indicator right over here, right? It held throughout the bear market. You know, we lost it over here, rejected over here, kept going down, 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 down. And when we reclaimed it, we retested it. Even during the banking crisis, we held it, bounced off it, and even back on its previous move, this entire move over here, guys, okay? This move where it was excruciating. How long did that take? Right? How long did that take? That took us 63 days. 63 days of just down, 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 down into the weekly dynamic, and just bounce right off it. Well, we're back over here on the weekly dynamic, and looks like we are holding it for now. Right? You can see that right over here. We're holding it. The level's coming at around 25,900-ish. Okay. So our thesis is, as long as you're holding this weekly dynamic, the weekly trend is still intact, right? This is where I added to my last position, my last add to my position. Been waiting patiently for this move to the weekly dynamic. Unfortunately, it's not come under the best conditions, or rather the best market conditions. What I would have preferred was like a consolidation sideways and a quick move down, as opposed to a grind down and then a move into the weekly dynamic, right? So quite honestly, this is not the way I would have preferred the test to have happened. But that's the same story that happened over here, right? We grinded into it and then bounced off it. So I'm just going to play my thesis. I'm just going to still hold on to you guys. You guys can see what I'm seeing, right? I just want to make a quick check on audio, etc. Yeah, I think so. My thingy is a bit delayed over here. Okay, cool, yeah. Okay, yeah, so, yeah, because sometimes I'm on the wrong screen and you guys are not seeing the charts whatsoever. That's, those days are brutal. But yeah, so weekly dynamic, guys. This is not something I'm just pulling up from out of my ass, right? We've been looking at this all the way back since, in fact, we're looking at it throughout the bear market as well, right? And then we claimed it over here. We're looking for the retest over here to add to a position, etc., etc. Now we are back on it and we're still holding it. So this check mark is still intact, right? The weekly dynamic green testing at the moment, still bullish trend. So this is what we want to hold leading into this weekly close. We have 10 hours and 19 minutes before we close. Okay, so go ahead and mark down this level, guys. 25,900. Our blue box territory over here marked out, but you guys don't need to worry about that. If we lose the weekly dynamic over here, it's going to look really, really ugly. Where's this blue box coming from? Essentially, it's coming from this low over here, right? You want to mark out this low too, but this low could be different on multiple exchanges, right? So the main level that you guys need to be watching is 25,900. Okay, we lose 25,900. It's essentially, I've been saying this again for weeks, even while I was super bullish throughout this entire move. If we lose 25,900, it's gonna turn this into an M. An M equals murder, right? We would be officially activating the M of the neckline of the M, and that would take us down at the very least, in my opinion, to 21,100-ish, right? At the very least, okay? At that point, we got to hope for Bitcoin to reclaim this level that we're on, right? Bitcoin's going to need to first reclaim that level before we can turn bullish, right? So if we lose this neckline over here on this weekly close in 10 hours, guys, that's when things get really, really ugly. This M-like formation that I have been worried about for a very long time is going to activate, okay? And we're going to look for a move all the way down to 21,100-ish. And yeah, I hope I'm wrong on that, right? But that's what I'm going to trade for. That's how I'm going to be playing all my positions. I'm going to be looking for that move. Are we all on the same page? This weekly close is critical on 25,900. You can pretty much end the stream over here because that's all that matters until tomorrow's stream or the stream I do on Wednesday, right? Tomorrow, likely going to do a daily video with Krisha, and she's going to highlight her thoughts to you guys. So this is how I'm keeping my trade very, very simple. This weekly levels are very, very important. Okay, lose 25,900, lights out for Bitcoin. Okay, but that being said, why are we still bullish on Bitcoin? We can go ahead, pull up the monthly. Why are we still bullish on the macro trend, on the higher time frame trend? And that is coming in from the monthly levels. Let's go here, let's go here. Let's turn on, we don't need the 21 EMA, not until the 10 SMA crosses over the 21 EMA. We do not need the 21 EMA, right? This is why I'm still bullish. Like, look at this. Like, just look at this picture, right? As long as the macro trend, as long as Bitcoin's higher time frame monthly trend has been above the 10 SMA, it has been very foolish to be bearish. Okay. Similarly, as soon as we start losing the 10 SMA, it's very foolish to be long-term bullish, right? Remember right over here, guys, those of you who've been following Mango for the longest time, all we asked for Christmas in December 2021 was for Santa to hold the 10 SMA. We did not hold the 10 SMA, and that essentially propelled us into bear market territory. Again, we've been holding it. Even during this phase over here, when we reclaimed it, we're watching how price reacts along the 10 SMA to get confirmation that our read of the 10 SMA is correct, right? And we got that. Every 1 hour candle was defending it. Every 4 hour candle was defending it. Every daily candle was defending it. We defended it on the month after as well. Held the entirety of this run to 30,000, and now we're come down and we're kind of seeing a defense on it too. We're not wicked off it yet, so keep an eye out for that next week, right? Because we have 2 weeks before this month could close. We could come down, tap these lows, hold the monthly 10 SMA. People are going to get shook out of their weekly trades, right? Including me. And the month could close fine. I could get shook out of my weekly trade and the month could close fine, right? Hey, that's trading for you. But this monthly trade, you can't leverage it, right? You can't trade the monthly on leverage. You got to spot trade this, right? Because even a 50% candle can happen on a monthly candle. And 2x leverage, you will get liquidated on a 50% candle. So do not take a monthly trade and be like, hey, I'm going to leverage that. You can't leverage that. Not even 2x. Maybe 1.25x. Maybe. Because remember, COVID would have liquidated you. Like, what was that candle? 55%. 55%. Right? We close the monthly on underneath though over here. You should have gotten out right over here. But yeah. Any questions? Can you touch on Joseph Wang and how T-bills will be a tailwind? Just want to know how to have the Mango mentality regarding that. T-bills will be a tailwind because it's going to essentially suck out liquidity from the reverse repo facility and essentially allow for it. How do I simplify this for you? Because okay, this is a better way for me to put it. There's a bunch of liquidity, okay, sitting in the reverse repo facility, and the treasury has the option to either issue if the yield curve is sitting like this, right, in terms of the shorter duration being on the left hand side and the long duration being on the right hand side, the treasury has the option to either issue shorter term duration bonds or longer term duration bonds. If they issue longer term duration bonds, which they usually would have, right, that would have sent yields up, right? Because more supply, again, at the beginning of the stream, I talked about supply and demand. If there's more supply, what's going to happen? Prices of bonds are going to go down, right? And if prices of bonds go down, yields are going to go up. If yields go up, what we talked about in the previous stream, yields go up. The 10-year specifically going up, which is on the long end. If the 10-year yields go up, it's going to take away liquidity from the system. It's essentially pressure on risk assets, right? So it's a tailwind in the fact that there's not going to be headwind on the long side. That's the simpler way to explain this situation. In the fact that the treasury is not issuing bonds on the long end of the curve, there's going to be pressure being taken off from the markets, especially if the markets were forward pricing the treasury issuing longer term bonds, but now they're issuing shorter term bonds. So yeah. right? And there's a bunch of liquidity that you're trying to target from the reverse repo facility. Does that make sense? Hey, Lena. Hey, Claudia. And how's it going, Vlad? Good to see all of you guys in here. Okay, just to give both of you, Lena, Claudia, a quick recap on what we talked about. Essentially, key levels to watch out, girls, is essentially the $25,900 level leading into this weekly close, coming in 10 hours. All right, 10 hours. If we lose 25,900, it turns it into a very, very ugly situation where I'll be looking for around 21,000 to 20,000, right? Somewhere around there. Okay, so I'm still bullish though on the longer term trend on Bitcoin as long as we are holding the monthly 10 SMA. Why? Because hey, technical analysis, we stay on the side of probability. Probability is as long as we're above the monthly 10 SMA, we are going to be staying longer term, not leverage term. Longer term bullish. We're going to stay leverage trade bullish, very, very low leverage as long as we're holding the weekly dynamic, right? We went through all of this in the previous stream, guys. If you missed it, I went through all of these indicators and I gave you guys a very detailed explanation as to what's going on with Bitcoin. Okay, weekly dynamic is still holding, monthly time frame is still holding, monthly stocks are not looking the best, weekly Senkin living underneath, likely going to close underneath, weekly cloud never activated, right? This is a condition as to when we actually turn longer term bullish for the parabolic run. In fact, we can talk about that a tad bit today. A tad bit, because Kusha doesn't want me to spend too much time on the stream today. She wants me to actually feed myself. Need to do that every now and then. Okay, 48 dynamic looking freaking ugly. Weekly 200 moving average is precarious. May not hold. 10 hours though. Let's see. Weekly 200 exponential moving average. It's actually holding. Let's go ahead and turn that on. That's actually something that is worth looking at. Let's clear everything over here. Turn on the Ichimoku. Turn on our exponential moving average, the purple line over here. Let's hide the Ichimoku temporarily. And we should look at BLX. Boom. Okay. This has been a very, very good indicator as to whether or not we should stay bullish or bearish on the markets, right? Longer term trend. Over here it held. There was not enough price action, right? But it's enough to look back at it and say, hey, it held. How to play over here in the 2018 bear market? It held as resistance. Put it in an ascending triangle right underneath it. I remember viscerally trading this. We were all hoping, praying that Bitcoin finally freaking breaks this 200 exponential moving average. Do you guys remember how frustrating this was? Every time we shot up to this move, it got hard rejected. Every time we shot up to the 200 exponential moving average, it was a hard rejection. And then the grind into the level, right? This, guys, this is Bitcoin climbing the wall of worry, right? This is a perfect example of it, right? And you don't want to see this, not to the upside, not to the downside. Over here, we saw to the upside, and the bears do not want to see something like this, right? Boom, breaks to the upside. And then we held it for the COVID rally too, as in held it as resistance. Every candle, 1, 2, 3. When we took it out, living above it was bull market territory. Over here too, because when we close underneath it, sent us into bear market territory. Used as resistance. Over here, boom, right? Very, very similar to the situation, right? Over here, very similar. And cleared it, did not see a big move, and then we grinded down into it, right? This is, again, as a bull, you don't want to see something else happen. You want to see the move into a key level like this happen very quickly. The bounce was nice. The bounce was as you expect, right? But this grind down here is not what you want to see. Now, let's see. Again, if we lose this 200 exponential moving average, it's going to highlight the M-like formation. M stands for murder. At that point, just looking at the 200 exponential moving average, you could actually look all the way down to 16K again, right? But we do have an interim level at around 20,900. But key level, guys, again, 25,900 for the weekly close. If we lose that, it's going to be ugly. But for now, we're holding the 200 exponential moving average. Okay, something I want to talk about in regards to the weekly cloud. If you guys remember, when I started getting bullish all the way back around 17K, 16K, I said that I'm not going to look for a parabolic run until I see the weekly cloud turn green. Okay, until I see the weekly cloud turn green, I'm not going to look for a parabolic run. And one of our key levels that we were going to look to sell at, depending on how fast Bitcoin moved up, was $42,000. The faster Bitcoin moved up to $42,000, the quicker I would sell. Mark asked me a question back then, Sean, what if Bitcoin gets up to around 32,000? Are you likely to sell over there? And it was a really hard question because it was a key level, but I just wasn't okay selling over there. The win wasn't while that was a key level, the win wouldn't have been worth the risk I was looking for, right? Because my position sizing wasn't big enough to take profits at $32,000. So that was a key level that did end up being respected. And what I had said was, if we pull back at that period, if we pull back at $30,000, which we now have done, back then I said this: if we pull back at $30,000 and start consolidating and we hold 24K-ish, right? Because if you guys remember, I can pull it up for you guys. I have all my levels here. These are all the levels that we had drawn out, the pattern, everything. Target 1 was 24.4K, right? Target one was 24.4K. The thesis was, if we pull back at around $32,000, which is target 1.5, right? If we pull back there, that gives the Ichimoku cloud time to flip green. If we consolidate, right, at that point, I can actually start moving my targets up, considering we hold 24K. Now, what has ended up happening was the monthly 10 SMA has come up to 24K as well, guys. Everything is confluencing at a critical level, at the thesis level, all the way back then that we had speculated on. We just speculated on, hey, if we get up to 32K and we reject, it's going to suck because I wouldn't have taken profits. But what the silver lining is, I get to move up my targets, right, from 42K to higher numbers, provided we hold 24K. Okay. At the time, though, we couldn't have foreshadowed the monthly 10 SMA also coming up to 24K, around 25K, 24K, right? That's where TA is so beautiful, guys. That's where TA is so beautiful. The confluence of events also makes it so beautiful. So now that's what we're seeing. That's exactly what we're seeing. We are seeing Bitcoin have the potential to flip this cloud green, giving us a much bigger move. Okay. Now I'm going to show you guys a chart that I drawn out a while ago. Okay. This is not real TA. This is us speculating back like weeks ago, months ago. We are speculating on certain outcomes, right? Those of you in seeds probably remember the chart. I talked about various outcomes, and one of the outcomes was us moving into this region over here around 36K, rejecting and coming down into the 24K level again, putting in a higher low. Now, we've kind of done that, where we've gone up to around 33K, and we've pulled down to 24K. Okay? But it's not happened at the timing that I would have preferred. This took 2 months too long. 2 months too long. Because had it pulled down earlier, which we have drawn out over here in yellow, I was looking for essentially a consolidation in this zone over here, right? And then potentially a move to around 180K. Had we instead pulled down aggressively and not got the consolidation. Okay, look at my drawing over here. Look at my drawing over here. I've drawn out 2 different scenarios, one in yellow, one in red. What I was essentially drawing was that if we go into the 32K level, come down into the 24K level, if we don't see a consolidation and instead just go up quickly, that's a sell. That's a sell in this region here, right? Instead, the longer we consolidate, the better the base, and then we can look for a bigger move, right? Now, however, with the current juncture, with what's currently happening, I think we consolidate over here even longer, guys. And by the way, this is the most bullish thing that can happen, considering the probabilities. Okay. Unfortunately, I know it's going to be boring, but up until like October, November earliest, the more probable scenario is that we consolidate between. Let me show you guys the weekly levels that we consolidate between. Between these 2 blue box territories here, essentially. I need to make my chart a bit cleaner for you guys. So between these 2 blue box territories, right? So just doing something extremely boring like this, right? This is the 4-day chart. So this entire zone takes us into November, and then we break up. But hey, if you could sit through all of this shit, an inverted head and shoulders over here would be pretty nice, right? Cheers, Mark. Cheers. Yeah, exactly, Wick. Exactly. So that's why I wanted to show this chart to you guys, because clearly it didn't play out, right? But why am I showing it to you guys? I'm showing you guys how I'm thinking, how I make my decisions as to where I sell. The faster price moves up, the quicker I'm going to sell. The longer we build a base, the more I'm going to allow price to move, right? So if we do something like this where we consolidate over here underneath the 618 level, etc., if we do something like that, at that point, guys, because we have a bigger chance of the cloud turning green, right? This cloud is red. We've gone through the historical events of all of this, right? I'm not going to go through it again. Again, watch the previous video. Towards the end of the video, I go through the combination of the cloud and the Fibonacci retracement thesis. If we get the cloud turning green over here, guys, I'm going to look for 200K, right? 200K. Now, again, that's all provided that we actually hold 24.5K, the M-like formation. If we lose the 24.5K level, then this 10 SMA is lost, okay? And then we have to be bearish until we start seeing signs of bullishness again, okay? It is what it is, guys. I'm sorry. It is what it is. Yeah, so Roberto has a good point. Anyway, the last 9% dump was a lot of motion. It all just happened in 5 minutes. I haven't checked that, if that's true. It does make sense considering the amount of leverage that was positioned for the volatile move, right? And clearly the market was positioned for that to break to the upside. And when we did break down, they all had to unwind their positions at very, very unfavorable prices. People are like, positioning sizing happens to a psychological level where you're like, oh, volatility has compressed so much, the move is going to become huge, right? The move has to come huge. And when you have conviction, the traders who are trading at that juncture were extremely convicted in either direction. The bulls were extremely convicted and the bears were extremely convicted, right? The issue is, if your risk management is not in place, okay, where your risk management does not check your emotions in regards to your position sizing, your stop losses, your invalidation, you could get really, really wrecked. Even if you have a good key invalidation, you're using the volatility in only one direction, right? Rather, you're thinking about volatility in only one direction, because the volatility going against you will not let you exit on time, right? Will not let you exit on your invalidation. So your stop loss needs to protect you in that regard. Again, if you guys in the C program, you guys know exactly what I'm talking about. Use your risk management module, use your risk management tool sheet and your risk management indicator, and you should be protected against events like this. It's still going to hurt, but again, if the win had come, it would have been a massive win. So yeah, the whole point of that risk management indicator is to protect you. Follow your rules at all times. What can we say to those people who still think 15K is on its way again? You don't need to say anything to them, man. Like, they could be right. You could be right. You got to follow your rules, though. Like, when I was a new trader, one of the biggest mistakes, like, you're going to be much better off always losing money on your own terms than losing money on someone else's call. Everything I do over here is to teach you guys how to make your own calls, right? So let's say you had a read and your read is, hey, the market's going to pump, okay? But then you go to your favorite influencer and he says, no, the market's going to dump, and you make a decision based on his call and then you're wrong. It hurts 10 times more, man. It hurts 10 times more. The reason markets exist is because people have opposing views. There are people who think Bitcoin's going to go to 200,000 and there are people who think Bitcoin's going to go to 2,000. That's why we can make a market. That's why there is liquidity for you to buy, because there's someone who thinks Bitcoin's going to 2,000, so he's selling to you. I'm being a bit extreme here, but you guys get my drift. What's the point of putting a monthly on the screen? What do you mean, man? I'll tell you the point. this is the point to understand the direction of the trend, because you want to trade in the direction of the trend. You want to not trade against key trend support levels. Like over here, for example, when we lost the monthly 10 SMA, right over here, December 2021, we knew that, hey, things are about to get bad. We lose a monthly 10 SMA again, we know things are gonna get worse. Murli says, Sean, the 3-week Bitcoin chart looks really interesting. Touching a close below the 10 SMA 21. I haven't been looking at the 3-week. Let's go take a look. 10 SMA. Okay. How has this played out in the past, the 10 SMA? Have you backtested this? Oof, it's pretty nice over here. Close above, very nice. Held over here. So the 3-week 10 SMA, Murali, is essentially the 1 week 10 SMA, right? Sorry, the 1 week 30 SMA, which is a key moving average. Losing it is not going to be a good sign, but we're going to lose a neckline too if we close here on the 3-week. This is probably something to keep an eye on, but I can't personally. 26,300 is what we want to defend on this one. Yeah, doesn't look good. Let's look at the oscillators here. Double top. Yeah, no, not looking good. Monthly chart is so useful. Very rarely have fake outs happen on the monthly levels. Exactly. Ignore the monthly to your own detriment, man. You could use the monthly even if you're trading the lower time frames. Like if you go back and watch the price history over here, you'll see how well the 1 hour time frame was holding these 10 SMA levels. You could have simply taken so many trades just off the 1 hour time frame by drawing a horizontal off the 10 SMA level, right? Just put a horizontal right over there on the 10 SMA and then watch price. Again, over here, all you have to do is track the 10 SMA and watch to see how price reacts across it. You'll be surprised. You will be surprised. All right. Okay, so that's what I wanted to talk about. And finally, we can talk about Dixie. This blue box territory that we drew out in the previous stream, it seems to be holding, guys. Seems to be holding. Right? So again, what we don't want to see is this yellow squiggly line situation. Right? We had drawn out this scenario over here where we're looking for price to come up maximum around to the blue box territory, take out these highs over here, tap into the liquidity, and then come back down. That's what we want to see on Dixie. We want to see this strength wane. We want to see Dixie's strength begin to weaken. We don't want this falling channel over here to break up. Can you see it on the weekly better? Just drawing it crudely here, just so you guys see what I'm talking about. We want this to break, okay? So remember, what are the few things that we are looking for in terms of market liquidity conditions to improve? We want Dixie to go down, because if Dixie goes down, it's going to take pressure off a lot of dollar-denominated debt, right? If the dollar gets weakened, the debt that you owe in dollars is going to weaken, right? That's a very simple way to look at it. We want the 10-year yield to go down, right? If your interest payments go down, it means that you have money to buy other shit like crypto. And this is pretty much the two simplest things that you guys can keep an eye on. There are other things too. You can look at the yield curve. You can look at what the treasury is doing, etc., etc. But you can look at the reverse repo facility, whether it's emptying, increasing, etc., etc. But for the most part, this is the two key factors. Let's see. Yeah, there's nothing else I'm missing. Nothing simple that I'm missing at the very least, right? Yeah, I don't want to confuse you guys too much with the more complex stuff, which is not all that useful. I mean, it's useful, but not necessary. Can I just say this year's 25k time is not the same as last year's 25k. It's not 25 inflation narrative. It has eased, yeah, true, but also current price is better now than same price last year. Yeah, I agree with that. I agree with that. The monthly close is also the 2-month close, keeping an eye on the 2-month 10 SMA and the 21 EMA. So Murali, you, again, I'm not trying to lecture you and nag you here, but be careful with too many time frames, eh? Like you're looking at the monthly, the bi-monthly, you're looking at the tri-weekly. As long as these are the few time frames that you're looking at, right? Because maybe you're not looking at the weekly. Maybe you don't care about the weekly. Maybe you care about the tri-weekly, right? Maybe you don't care about the bi-weekly. Maybe you don't care about the monthly. But as long as you're eliminating time frames, buddy, right? If you're adding time frames, eliminate other time frames. Because it's so easy to just get lost in time frames, right? Week often respects the 89 EMA. Okay, so Julian's also looking at the three week. Maybe there's something there that I need to keep an eye on more often. Bitcoin dominance, interesting, yeah, guys. Remember again, I want to talk about this quickly before I leave. We talked about the scenario where when Bitcoin dominance did break up, we talked about the scenario that, hey, we could be wrong on this actually going up. And if we break back into the range over here, we drew this squiggly. That's when we have an opportunity for altcoins actually exploding, right? Because think about this scenario, guys. What's exciting? What's exciting is Bitcoin doing this between these two blue box territories over here, like this, and altcoins pumping. That's exciting, okay? If Bitcoin does this and altcoins also do this, Jesus Christ, man. I'm gonna kill myself. Like I'd rather Bitcoin dump than this scenario where both just go sideways. If Bitcoin goes sideways and all coins, at least the low caps and mid caps start pumping hard, right? I'll take that. That's gonna be really exciting because it gives us so much time to collect Bitcoin. I mean, some of my biggest wins have come from that scenario, right? Because it's really hard to collect Bitcoin. Just trading Bitcoin in a bull market and Bitcoin's going up like that, right? It's not as easy as collecting Bitcoin when Bitcoin's going sideways and all coins are pumping. Alrighty. Any questions, guys? I'll take a few questions before I leave. Bitcoin specific though. What's anything I'm missing? I don't think I'm missing anything. I think we can wrap up. Just talk about the lower time frames really quickly. What's going on over here? It's not looking good. I'm not gonna lie to you guys, not looking good. Ooh, we're holding. Okay, do you guys remember? So we're holding a 10 SMA, which is really good on the 4 hour. Okay, what we're looking for now is for price to start drifting and playing between the 21 EMA and the 10 SMA. Right. Watch for that. First move into the 21 EMA is likely going to be a rejection. You guys can look to short that. Okay. That's a short, lower time frame short. But you want to wait for the candle close. The wick could actually go all the way up to the Tenkin, and the Tenkin is probably higher. So Tenkin's here. The wick could happen at the Tenkin with the rejection closing underneath the 21 EMA. So be careful for the volatile move if it does happen. What we eventually want to see is 10 SMA go up, 21 EMA come down like this, price start living above it, and then the interplay starts again. Similarly on the 12-hour time frame, where we claim the 12-hour 10 SMA, the 12-hour 21 EMA, and you just keep going like that, one time frame after the other, till the daily levels are claimed, which are currently sitting all the way over here. Alright guys, with that, I hope you guys enjoyed the stream. Supposed to be a 15-minute stream, turned into a freaking 41-minute stream. Jesus effing Christ, man. This is how much I love you guys. Always here for you guys during the bear markets, during these bear market dumps. Cheers, Alina. Cheers, John. Cheers, Krisha. Cheers, Murli. Cheers, Roberto. Avi. How's it going, buddy? Julian. Frank. I'll see you guys in the next one. I'm hungry. Ciao. Have a nice Sunday. Love you, Ben. Love ya. Love ya, Black. Love y'all. I'm missing probably a bunch of you.
Yeah, see ya.